Hi, welcome back. Today we're going to go through a comprehensive example on the statement of cash flows. What you see currently in this lecture is what has been provided for you as the additional lecture handout in the Excel file. This already has the answers to the statement of cash flows populated already. I thought this would be the best way to explain how the statement of cash flows is presented, as well as allow us to go step by step each line, and I can provide a little bit more information on why certain balances increased or decreased, and why they were in certain categories between operating, investing, and financing. So I strongly encourage you to take additional notes for this lecture. There's not an additional section in the note packet for taking these notes, but it will help you understand as we go line by line kind of the caveats and the key things that you need to take into consideration when you're completing the statement of cash flows. For your homework, you will have a very similar type of problem where I will provide you with the financial information very similar to what you see in this lecture. There may be a few caveats. For example, in this problem we're going to go through today, there is a loss on the sale of land, but you could see something like a gain on the sale of land or something like that. For purposes of the homework and the exam, the statement of cash flow concepts that are outlined in this lecture handout are what you will be required to know and understand when putting it together. There may be parts of the statement of cash flows, transactions that increase or decrease certain areas. However, if they're not discussed in this handout or on your homework problem, you will not be required to know all of those specific caveats for the exam. I just want to clarify that you still need to know these things, but that there are certain things that I'm not going to ask you how they impact the cash flows from, for example, let's say operating activities. I'm not going to ask you to account for an impairment of an asset or the loss on an investment in common stock using the equity method, or amortization of intangibles and deferred charges. There's certain things that, while they do impact the statement of cash flows, we're just not going to cover them for purposes of what you need to know for the exam and your homework. So the main things that you're going to have to account for as you go forward with the homework and the exam are things like depreciation, loss or gain on sale of land or bonds, um, or comp proceeds from common stock, changes in inventory, accounts receivable, accounts payable. In this example, we talk on changes to income tax payable and prepaid insurance. So these are the common things that you're going to see when you get to your homework and your exam. So if you can understand this example we're going to today, you should be able to do this on your homework and also on your exam, as this is the basic concepts that you will need to understand for statement of cash flows, and I will not try to trick you with anything unusual in nature. So, just a few things before we dive in, just as a tip, and as this was noted in the lecture handout packet, when you're given this information like the balance sheets, income statement, and the other information, you may be given the information of what the change was from year to year, such as what I'm providing in column H. However, you may not be provided that column on a homework or an exam, and you would have to calculate that difference yourself. Not anything hard, just something to keep in mind that you may or may not be provided that information. Second, as you can see here in row 33, there's a tip. This is a very important cross reference here. When you do the statement of cash flows, your net increase in cash between the years, so in this example 90,000, needs to be what your net increase in cash is after you complete the statement of cash flows. So as you can see, and we'll touch more on this shortly, but the sum of all of these changes and net cash provided by operating, investing, and financing it equals the net increase in cash for the year of 90,000, which represents the difference between the current year and the prior year cash balance. So, that is something to make sure you keep in mind. That is a great cross reference. If you put information into the statement of cash flows and at the end it does not equal that, then you did not do something correctly, whether you forgot an activity or if you increased something when you should have decreased something, etc. As you're completing this on your homework and your exam, I encourage you to do as much as possible. If you get stuck and for some reason you can't get this cross reference of the net cash to balance out and you can't figure it out why, do what you can as much as you can. Be as descriptive as possible. For example, there are caveats and little things you have to remember with certain accounts, whether they increase or they decrease. For example, if you were to say that the increase in accounts receivable, well, based on the facts that we learned in the lecture handout, an increase in the accounts receivable account actually represents a decrease in the statement of cash flow because you sold the something on credit and did not actually receive cash for it. Therefore, if you were descriptive enough and said increase in accounts receivable, but then but accidentally made this a positive number, you would at least get some partial credit for recognizing that you needed to adjust for accounts receivable. However, you just did it in the wrong manner, the wrong direction. So you would still be able to receive some partial credit. So being as descriptive as possible is the best way to go. And lastly, before we get going, when you start to do your homework, you will likely be given something similar to this, the balance sheet, income statement, other information area. And then I will just ask you to complete the statement of cash flows, and this is how you will want to present it in your response. Something similar to this. It doesn't have to be perfect exactly like this, but you will want to start with your net income, work your way down to get all of your operating. Then you'll do your investing, then you'll do your financing, and then you can show the net increase in cash. So you will not necessarily be given a table like this already filled in with the answers of, depreciation expense or net income and like these, entries, but you will be required to fill those in when you complete your problem for your homework and also for an exam. Okay, so first up, let's just kind of go step by step throughout this. And my plan is to try to put together an additional problem um, in addition to your homework that will, with information that goes step by step. So, kind of what we're talking about today. And I think what I will do is try to target that to be something you're given in your exam 3 review sheet. So, that will be helpful in terms of, as you walk through it, here's the things you need to consider with regards to certain things like accounts receivable, accounts payable, gains and losses, things like that. So, all right, let's get started. As we were talking about in the lecture handout packet, your first step for calculating the cash flows from operating activities under the indirect method, remember we're going to focus on the indirect method for cash flows from operating activities. The first step is net income. You always start with net income. So, as you can see, net income of 43,400. I just started there. As we discuss next, your second step is depreciation expense. Every example that you will be given, you will have to account for depreciation expense. And you have to remember you add depreciation expense back. And the reason is because depreciation is a non-cash transaction. Therefore, it was included in net income because it decreased net income by the amount of the depreciation expense. But since it is a non cash item, it needs to be added back to that net income balance to properly show what the cash balance or cash provided from operating activities is. So, what I think I'm going to do to try to make this easiest to follow rather than color code each one, I will put letters next to each one here. and then that way you can kind of trace it through. Next is the loss on the sale of the land. So as you can see down here in this other information category, there's a few transactions that you're going to have to account for. The first one is the land that was originally cost the company $100,000 was sold for $90,000. As we touched on in the previous lecture handout packet, when you have a sale of something like land, you have to account for it two ways. One, you have to account for the proceeds from the sale of the land, and those are reflected in investing activities, since this represents land, investing in yourself, and this is the sale of that plant asset, so the land. So you have to account for the proceeds in investing activities, but in addition, if there's any gain or loss, you have to put those in operating activities. So because we have a loss in this example, you are going to have to show that in two places. The first place is the proceeds from the land. So we sold $90,000 worth is what we got for when we sold the proceeds. So we will represent 90,000 in cash received from the sale of the land as an investing activity, and this was because we sold the land and received cash. In addition, we have a $10,000 loss. Therefore, that is an operating activity, and if you can keep that straight, that will be one of the tougher things in the statement of cash flows is to make sense of, is understanding that when you sell something like plant assets or land or buildings, if you have a loss, that balance goes to the loss is represented in operating activities, whereas the sale of the asset is represented in investing. Next, we have to reflect the increase in accounts receivable. As discussed just previously, and also in the other lecture handout packet, when the accounts receivable account increases from year to year, this represents the fact that you sold more on credit than what you collected in cash. Therefore, it decreases the cash provided from operating activities, because what this represents is the fact that you didn't get cash for those revenues that you generated in net income. You put it on credit, and therefore you have not received the cash, so you do not get to represent that balance in your cash provided from operating activities. If the accounts receivable was to decrease from year to year, this represents the fact that you collected more cash than what you sold on credit. Therefore, it would increase the balance because of the cash you collected. And as a reminder, what we talked about in the first lecture for this chapter is that you have to assume that all sales are on credit for purposes of this class and the statement of cash flows. So, in this example, we sold more than we collected on credit, and that's because we're assuming that all sales were on credit. Next, we focus on inventory. So, from year to year, there was a $20,000 decrease in inventory. And what this represents is that you sold more product than what you were buying. So, because of that, you selling more product than what you bought, that means you're collecting more cash than what you're spending. If you had an increase in inventory, that means you would be having cash out the door because you would have to pay cash in order to get that inventory. In this instance, there is a decrease in inventory, which means that you sold inventory and in turn received a cash flow. Therefore, in this example, it will increase your net cash provided by operating activities. Next, we go to is the decrease in accounts payable. For liabilities specifically, it's a little differently than how they work for the assets, like accounts receivable. Accounts receivable, when there's an increase in the asset from year to year, you decrease the balance when you're looking at the statement of cash flows. When it comes to the liabilities, such as accounts payable, it is the opposite. When there's a decrease in the account, it represents the use of cash, therefore, it decreases the cash flow because you paid cash to decrease the accounts payables that you owed. So this for this example, during the current year, $5,000 represented the decrease from 2014 to 2015. Therefore, it is going to decrease the amount of cash for operating activities because in order to decrease the accounts payable, you had to use cash to do so. Next, we have prepaid insurance. What prepaid insurance represents is cash that you spent in advance of needing to spend it. So you paid on, for example, let's say January 1st, you paid all of your insurance for the entire year in one payment. Well, because you earn that insurance over time throughout the year, you have to represent it in a prepaid insurance account. In this example, you had a $2,000 increase in the prepaid insurance, which means you spent cash out the door in order to do the prepaid insurance because you paid your insurance in advance. So this represents a use of cash and therefore a decrease in the cash flows. The last one for operating activities is the increase in income taxes payable. Similar to the decrease in accounts payable and what we were discussing, in this situation you had an increase in income taxes payable. Therefore, you will increase the cash flows provided from operating activities. This is because you did not pay cash to decrease the payable. Since your payable increased, you actually saved cash because you did not pay back that balance that you owed. So that is all the items for cash flows from operating activities. And as you can see, there's a few tidbits of information on operating activities you have to make sure you understand to be able to properly complete this cash flow statement. And the main thing is understanding the relationship that assets and liabilities have in terms of whether they increase or they decrease that the net cash provided from operating activities. The main bit of advice I would have is just think of what some of these accounts are. You know that in order to, if you owed someone $100, you have a payable of $100. If that payable goes down to $80, the only way that that payable went down to $80 is represented by the fact that you paid $20 to the person you owed the money to. So that would represent cash out. On the flip side of that, say a friend of yours owes you $100. If your accounts receivable account from him increases, that means he owes you more. However, he actually did not pay you the cash. But if that account was to decrease, so less accounts receivable, that would represent the fact that he actually did pay you some of the money. So that is a very, very important thing to understand. And I think the lecture handout clearly kind of outlines that, and also the illustration number 2 in your handout packet will definitely help you understand when you decrease and you increase certain balances. But the main bit of advice I'd have is just think of how it's working and what the accounts are, and whether, if you have a debt and it goes down, that means you used cash to pay down that debt. So as you can see, we took net income, we made these adjustments, and therefore it got us to net cash provided by operating activities of $65,000. Next, we're going to move on to cash flows from investing activities. We already covered the proceeds from the sale of the land. where we made $90,000, with the $10,000 loss being represented in operating activities and the proceeds from the sale being represented as investing, because this is a long-term asset. Remember, think of it as investing in yourself. The only other item for cash used by investing activities is the purchase of the building. As you can see in the other information section at the bottom, we purchased this building for cash. Therefore, we spent cash to acquire this building. And as you can see, our building account went up $100,000. Therefore, this represents cash we spent to acquire the building, so cash out the door of $100,000. Thus, we have to decrease it from the cash flow to represent cash that we spent on the building. Those are the only transactions in this example for cash flows from investing activities. The only other one I would note is, and this also ties in with some examples of financing activities, these bonds that were issued at par in exchange for land. As you can see up here, there's a change in the bonds account, bonds payable of $20,000. That is not represented in the statement of cash flows. And the reason is because the bonds were issued at par in exchange for the land. Therefore, there was no cash that traded hands. However, if we were buying bonds of someone else and owed them money back at the end, the payable, if we actually paid cash for that rather than exchanging it for land, we would have an additional outflow that would be reflected in the investing activities. So that's something to keep in mind when you're going through your homework and on the exam, that, for example, if this said bonds were issued at par and exchanged in exchange for cash, then there would be a difference and there would be a cash flow represented for that. Please note there is a difference between whether you are the issuer of the bond or the one buying the bond. In this example, we issued the bonds. Therefore, the bonds would be reflected in financing activities, not investing. But since we exchanged it for land, there was no cash changing hands. Therefore, it is not reflected in the in any of these sections of the cash flow statement. Moving on now to financing activities. First up we have is the payment on the long-term notes payable. As you can see, the long-term notes payable account decreased $10,000 in the current year, or between years. So, similar to above when we were talking about accounts payable, for your liability to decrease, it represents a payment of cash to decrease the amount that you owed. Therefore, you will represent a $10,000 outlay of cash, and so therefore it decreases the cash flow statement. Next is the proceeds you received from issuance of stock. As it says down here, and in addition to this line up here, but down here in the other information, common stock with a par value of $50,000 was issued for $60,000. Therefore, the par value account, so the common stock account, increased by $50,000. And since you sold it for more than par, you had additional paid-in capital of $10,000. You recognize the proceeds from the issuance of stock of $60,000. And you sold this stock for $60,000. Therefore, you received $60,000 in cash for the common stock that you just issued. So this represents cash coming in the door, a cash receipt, and thus you would recognize it as an increase to your statement of cash flows because cash came in. The last item on here is the payment of dividends. As you see in this last box here for dividends of other information, we had $15,000 of dividends that were declared and paid during the year. This represents dividends paid to others who own our stock. And if you remember back to the illustration number 1 in the note handout packet, dividends received from others is an operating activity, whereas dividend paid of your own company's stock to the owners of that stock is a financing activity. So that is something very important to remember. So in our example, we paid dividends of $15,000 on our own stock to the people that own it. So it is represented as a $15,000 out the door because we use cash to pay the dividend to the owners of our stock. So it is a financing activities. If this, in this example, if I would have had another line that said the company received dividends of $15,000 during the year, that would have been shown under the cash flows from operating activities. Or if I said that the company had interest revenue received from other companies of $20,000, that would also be something that is reflected in operating activities. So it's important to understand that there's some of these caveats where if you pay it, it gets treated one way versus if you receive it. So those illustrations in the note handout packet should help, I think, to clarify that as you go through it. But if not, please let me know and I can try to find a way that maybe would better explain some of those differences. So now that we've gone through all of them, we have the net cash provided from each of these activities. As noted at the start of this lecture, if you take the sum of these three, it gives you $90,000. $90,000 is the difference between the current year cash balance and the prior year cash balance, and that has to balance. If that doesn't, you did not do something correct in the statement of cash flows. So, the sum of the net cash from each of these three categories of activities must equal the difference between your cash balance over the year, because that is the whole point of what you're doing in the statement of cash flows, is you were trying to reconcile the change in cash over the year. You will notice that there are some things on this information that we did discuss in the class but are not shown on here. The main thing to note is there is a difference between what type of activities are shown between the direct method and the indirect method. For example, salary expense. This is an operating activity. However, it is not shown in the calculation of the indirect method for the statement of cash flows because this salary expense is already reflected in this net income balance. So, because of that, you do not have to do anything with it under the indirect method. However, please note that it still is an operating activity. So if I were to give you a matching problem per se, and I said company A had $75,000 in salary expense during the current year, you would mark that as an operating activity. However, it's only shown as an operating activity if you were following the direct method as we outlined in the lecture handout, where in that scenario you just start with all your cash in and then you subtract all your cash out, and then it gives you the amount of cash you spent during the year, versus the indirect method starts with net income and works its way down to the cash as a reconciliation. So one bit of advice for your homework, quiz, and exam is making sure you understand the type of activities, the type of transactions, that fall within each activities, and then also knowing, do those activities fall within these three categories when I am presenting it in the statement of cash flows. So as we just discussed with salary expense, it is not something that is shown separately individually in the operating activities section because it's factored into this net income balance. However, if you were showing this on the direct method, you would actually show salary expense of $39,000. But as noted in the lecture handout, you will only be required to do the indirect method when computing the statement of cash flows. You will, however, be required to know when certain transactions, if they are operating, investing, or financing. So just because salary expense isn't shown separately as an operating activity, it is still an operating activity in the sense of the statement of cash flows as a whole. It would just be only shown if you were doing the direct method. That is all that I have. I hope this made sense on these type of entries that were made for the indirect method for the operating activities, and then how you present investing and financing. I again urge you, make sure you understand and know the illustrations at the back of the lecture handout packet as well as you can, as this will definitely help you remember when something is increasing or decreasing, or what type of things fall within the operating activities, the investing activities, and the financing activities. Again, I will work on providing an additional handout with another example of this that you can work through to make sure that it's clear how to present this. This is pretty much how your homework problem will be, and I would expect your exam to be very similar. There may be a little differences in things that I question you on, like for example, in this problem, we had a loss when we sold the land. I could perhaps give you a gain, or in this example, we paid dividends, but in another problem you have to work, it could say we received dividends. So there's other little caveats like that that I could make sure you understand, but the basics here is kind of what you'll see and what you will need to complete. So I hope that this makes sense. This can be a very complicated process, the statement of cash flows, and understanding why things are increasing it versus decreasing it. Again, I recommend that you take a step back and you just say, what is this account? Why would accounts receivable increase and why would it decrease? When are you getting cash and what impact does cash have on that account? Whether you're collecting cash or you're paying cash on an asset or liability, how it makes those accounts change normally. So, hopefully this made sense. I do not have anything else to add today. I hope that walking through this helped, and also what's in the lecture handout packet will help with regards of explaining why certain accounts change, and then also what type of transactions are falling within operating, investing, and the financing activity categories. As you go through your homework, if you have any questions on this, please let me know. If something is not clear on why a balance should increase or decrease the statement of cash flows, or why certain balances were included or not, please let me know, and I will do my best to try to give you more examples or further try to explain it for you to understand. So I definitely encourage you to ask questions along the way if you have any issues with completing the statement of cash flows. That is all for now. Thank you.